All right, welcome to today's show. So exciting. I'm going to be talking today, number one. We're going to talk a little bit about Microstrategy and a little bit of Buffett versus Saylor. And I'm going to get into an interesting discussion where Buffett was asked a question from a 13-year-old girl about potential hyperinflation in the United States. So we're going to talk about that, number one. Number two, we're going to answer the query or the question that Buffett has of how far can the printing of money go? His response is that nobody really knows. And to answer that question, I'm going to give you the history of empires and countries prior to us on how long the currencies lasted as they got into trouble. So we're going to take a look at that as well today. And then number three, we're going to look at some solutions today. So we're going to look at some solutions on like what is the solution to the problem in the printing of money? Could it be Bitcoin? Could it be X? Could it be Y? Could it be Z? We'll look at some potential solutions. And then finally, I'll take a look at a trade that I placed the other day on a version of MicroStrategy called MSTU, and we'll just take a look at the charts and the graphs from a learning experience. Okay, so I am diving in, and I'm going to recap for those of you just joining us what we are covering. But remember, this is not financial advice. This video is for educational and informational purposes only, should not be considered financial, legal, or investment advice or any securities advice whatsoever. Okay, so that is the story. And we're going to jump in. So if you're just joining us, what do you think? Did anybody see the conversation that was had between Warren Buffett and the 13-year-old girl where it went viral on the internet? So basically, here's the deal. John, what's up, my man? So here's the basic deal, right? So there was a video that went viral on the internet, and there was a 13-year-old girl that was asking Warren Buffett a question. And so she picked up her phone and she was reading off her phone, and it was a very intelligent question. And basically what she said was, hey, Mr. Buffett, she says, I'm very concerned with the fact that the dollar is the world reserve currency. And basically what that means, she didn't say this, but I'm interpreting this. Basically what that means is the world reserve currency, meaning the dollar is the world reserve currency. It's pretty simple. Like if you're going to go to Japan and you're French and you want to go buy a car, you would probably use dollars to buy the car, right? So lots of countries use dollars because it is the currency that many countries use when they're exchanging with each other. Also, it's a reserve currency or the world reserve currency because lots of people store dollars in their piggy bank so that they can exchange things and pay for things with dollars, okay? So the dollar is the world reserve currency. So this 13-year-old girl, she's looking at her phone and she's asking Warren Buffett a question who's on the stage giving advice to people. And he's sitting there with Charlie Munger. And the little girl says to Warren Buffett, Mr. Buffett, I'm concerned. The dollar is the world reserve currency. What happens if all of a sudden other countries decide to stop using the dollar? Eventually, we could have hyperinflation in the United States, which means like we'd have prices go through the freaking roof. And if prices eventually go through the roof for stuff and we have to keep printing money and keep printing money because our dollar is being devalued, and we have to keep printing money, then we'll have inflation, and eventually our U.S. economy could collapse. That was the basic question from the 13-year-old girl. What should we do about it? And so what happened was Warren Buffett gave an answer, and the answer that he gave was a longer answer. It was 5 or 6 minutes, but I'm going to summarize it. And the basic conclusion from Warren Buffett of one of the things he said, and I'm paraphrasing, is no one knows how long the printing of money can go. We don't know. We don't know how long we can keep printing the dollar. And the person who might know best is Jerome Powell. Okay? So very interesting, right? Now, that viewpoint is like, okay, that's kind of a no solution viewpoint. He acknowledges the fact that inflation is a problem. He acknowledges the fact that printing money is a problem, but he says basically no one knows how far the printing of money can go. Nobody can answer that question. That's Buffett's response. Now, if you watch Michael Saylor's video after the 13-year-old girl asked Buffett the question, and he kind of gives her a no answer and definitely gives her a no solution, right? There's no solution to her question of like, what happens if we keep printing money in the United States? What happens if people get off the dollar as the world reserve currency? What's going to happen to the US? Could we collapse? Is the 13-year-old girl's question. She's worried, right? She's 13. She's got another 100 years to live. Okay. Buffett's in his 90s. He doesn't have another 100 years to live. And he doesn't have a solution. And he doesn't have an answer to her question. The basic premise is no one knows how much longer we can go in terms of printing money. Nobody has the answer to that. And I actually, if we look at history, we can start to conclude what the answer will be to that question. We could all take a look at history and basically predict what would happen in the future if we continue to print money the way that we're doing it. So there is an answer to the 13-year-old girl's question where she asked Buffett a question. And there is a solution to the problem she's posing. And the interesting thing is she knows that there is a problem, and she's 13 years old. She's smart. Okay? So if we look at the history, I'm going to give you the history of different civilizations and how currencies have completely collapsed. And that is, we recognize the problem, and we recognize that the U.S. is heading towards a problem, is currently in a problem, and eventually the dollar will weaken. The dollar will get worse. Who knows if the dollar will collapse in the future? But if we look at the history of currencies, we can see the collapse of many, 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 many currencies over hundreds and thousands of years. So it is a problem. So to answer the 13-year-old girl's question, who posed it to Warren Buffett, and he didn't give a solution, and to also give you Michael Saylor's viewpoint on it, Michael Saylor basically watched the video of Buffett responding to the 13-year-old girl's question, and Michael Saylor just basically said he didn't give an answer. And he also said that when you're looking at people who are in America, who are multi-billionaires, who are comfortable with the situation that they're in, they don't really need a solution per se. And it takes nothing away from Buffett, from my viewpoint, who's been a titan for the last several decades. He's been unbelievable, one of the smartest investors on planet Earth. And he deserves the credit of the position that he's earned because he's a brilliant, brilliant investor. But also, his run has come to an end. His run has come to an end. There's a new generation. There's a new world. There's new technology coming in. And Buffett's run is over. And so we need to start looking for new solutions. And the response can't be nobody knows how long the dollar is going to go, or nobody knows how long the printing of money can go, because we do know what's going to happen in the future if we just study what's happened to civilizations in the past. We have some idea that the dollar is going to get weaker and weaker, and there's going to be an even bigger problem than we have now. Okay. And throughout this presentation, we can look through also like Cynthia Lummis's responses to this, who's the senator that's pro Bitcoin. We can look at what Trump might be doing with the strategic Bitcoin reserve, but we can also look at why it makes sense to have a world of Bitcoin and why it makes sense to have Bitcoin as a strategic reserve, not only for the US, but for many countries around the world, and why it's the only smart thing to do, and why it's the only solution right now that will actually potentially get us out of debt. If you look at Cynthia Lummis's plan, she's the senator who says, hey, if we just bought 200,000 Bitcoin every year for the next 5 years, essentially we'd own 5% of the Bitcoin supply. And only 5% of the Bitcoin supply, if the Bitcoin grew from now to 2045, the Bitcoin could be worth like something like $17 trillion. Our current U.S. debt is $35 trillion. If we wanted to pay off the current U.S. debt, we could invest the money in Bitcoin. We could invest the gold, the gold supply that we have in the U.S. We could just reposition into Bitcoin. We could let it sit there. We let it sit there for a long period of time into 2045, and potentially that could pay off half the U.S. debt, which is $35 trillion right now. That sounds like a good plan. That's an answer and a solution. Okay, unfortunately, because Warren Buffett does not believe in Bitcoin, because Charlie Munger, who's passed, called it rat poison, they are smart investors for their time. They are brilliant men. They are worth billions of dollars. They deserve lots of credit, but they don't have the solution for the next 100 years. They just don't. Okay? So what is the solution for the next 100 years? Well, let's look at the last 100 years of what happened to the currency. And let's really take a look, and let's be smart, because we need a solution, guys. The U.S. needs a solution. $35 trillion in debt, and we are the world's reserve currency. So nations around the world are depending on the U.S. because their currency is pegged to the U.S. dollar. Many of them, theirs are. Okay? So we have a problem. So what is the solution to the problem? And so I'm going to go into the history of currency in different civilizations that I want to walk you through right now. And then as we go through that, we're going to get into the solution of what is the potential solution to solve the problem. And then when I'm done doing that, I'm also going to show you some things that I'm doing with Microstrategy and a trade that I placed the other day, which is always fun to take a look at it and see how I am making more money in the short term and as well as the long term. And I share this for educational purposes only, entertainment purposes only, not financial or legal advice. Okay. So that was the answer. If you're just joining us, I'm giving an answer to the girl's question who was 13 years old and asked Warren Buffett a simple question and said, hey, the dollar is the world reserve currency, which basically means lots of people use the dollar. Right? If the French want to go buy cars in Japan, they're going to use the dollar to pay for it. Okay. Lots of countries around the world save US dollars, right? Because we exchange in US dollars in different parts of the world as well. So it's the world reserve currency. If people stop trusting the world reserve currency and they get off it, what does that mean for the United States? It could mean we have to print lots and lots and lots more money. It could lead to lots and lots more inflation, and we'd be in a lot of trouble. So the girl's asking the question to Warren Buffett. He doesn't necessarily have an answer. The basic answer is we don't know how far the printing of money can go. Nobody knows the answer to that. That's his answer. And he gives a 6 or 7 or 8 minute response or longer, but that's the basic of his answer. The only person who would have the close answer to that is Jerome Powell, is what his response is. He'd be the best one to answer that question. Okay, so why do we know the answer to what will eventually happen to the US dollar, or why can we predict what will eventually happen? Let's look at the history of money. So money is basically like a trust contract, guys, right? It's based on trust. When governments print too much money, it's like adding water to juice, right? Eventually, it gets so watered down that nobody wants to drink the damn juice anymore, right? So that becomes a problem with the printing of money. And if we look at civilizations, and what has happened to civilizations along the way who have printed too much money or have watered down their currency, we see that civilizations got themselves into a shitload of trouble. So here's some crazy stories from history to look at how currencies have failed big time, all right? So we look at the Roman Empire, right? Imagine like having a solid silver coin, right? And over time, the Romans start mixing it with cheap metals like copper and other types of metals, right? And so it's kind of like you have a candy bar and it's getting smaller, but you're keeping the same price, you're paying the same price for the candy bar. Eventually, the coins barely had any silver left in them because we're mixing them with copper. All right, so people stopped trusting Roman money. Prices for everything literally skyrocketed, and people went back to trading stuff like wheat and livestock and bartering with things like they did prior to the invention of quote unquote coins and silver money or gold money. Okay, so this went back and forth and lasted for about 150 years with this basic drama before the Western Roman Empire fell apart. So diluting the coins in the Roman Empire lasted about 150 years, and this game back and forth of trying to make it work and trying to not make it work, it just fell apart. And we had a similar thing happen in Weimar Germany when bread cost $1 billion, okay? Like literally, bread cost $1 billion, guys, okay? So after World War I, Germany printed a ton of freaking money. And they printed money because they had to pay off their debts from the war. War reparations, okay? At first, it's kind of like, you're finding this extra monopoly money, but soon they had so much money that people needed wheelbarrows of the freaking money to go buy bread, okay? They needed wheelbarrows of the money to go buy bread. You can't make this stuff up, man. You literally can't make it up. So a lot of bread costs, a loaf of bread costs a few cents in like 1920. By 1923, it was billions of marks. And marks is the German currency at the time, right? So people even used money at the time. It became so devalued in Germany that people started using money as wallpaper. They started using it to burn it in fires to keep their fires warm because the money became worthless, man. Like you can't make this up. They started using money as wallpaper because it was cheaper than buying real paper. That's how bad the currency got. It lasted about 4 years of chaos until they scrapped the old money and they started fresh. Are we seeing a trend here? The Roman Empire, Germany, okay? How about Zimbabwe, when trillions were pocket change, okay? So let's take a look at this. In 2000s, Zimbabwe starts printing tons of money because they have to cover the government spending. So it's kind of like you go to an arcade and you're like, hey, everybody, here's unlimited tokens. Take the unlimited tokens. Sounds fun until no one values the damn tokens anymore. So inflation gets so freaking bad in Zimbabwe that they're printing $100 trillion bills. It gets so bad that they're printing $100 trillion bills. But guess what? Even that wasn't enough to buy a loaf of bread. So that's when people started using the US dollar instead. So how long did it last? It lasts about 7 years before they ditched their currency in Zimbabwe. Then you got Venezuela. From riches to rags, man. They were swimming in oil money. Swimming. But when oil prices dropped, what do you think the government did? The government starts printing more money. It's like you're trying to pay off a broken piggy bank by literally gluing the pennies together. Didn't work. And what happened was the prices went up so fast that groceries literally became unaffordable in Venezuela. And people started trading goods like rice and flour instead of using cash. So how long did it last? Over a decade, and the problem is still going on in Venezuela. Still going on. Ancient China. Let's look at ancient China and the currency of ancient China. If you're just joining us, I'm talking about why we have a problem in the history of civilizations where the currency is just literally has gone to zero in many civilizations, and it just crashed. And we start looking at the dollar as the world reserve currency. Lots of people are using dollars to exchange and buy goods. And it is the world reserve currency. So what happens if the dollar gets weaker and weaker? What happens if people get off using the dollar as a world reserve currency? That was the question of the 13-year-old girl to Warren Buffett. And I'm showing you now the history of what has happened in civilizations of how their currencies have crashed. So is it possible that one day the US dollar and the currency could crash? It's very possible. We have to be looking for alternative solutions, particularly with money printing being as high as it is. Okay? So in ancient China, you have the Yuan dynasty invented paper money. But they got carried away. They printed way too much money. And like it's kind of like, you know, you're playing your favorite board game, but suddenly you have unlimited play money. Like eventually the game gets worthless, right? So people lost trust in the money in the Yuan dynasty. They went back to using silver coins, and the government's play money there just flopped. And that lasted about 100 years before they gave up on the idea. So notice the trend here. We have civilizations where their money's lasting 7 years, 4 years, 100 years, 150 years. How about France? Okay. In France, what happened during the French Revolution? The government created paper money. You can look it up, the pronunciation of it. It's something called like assignats or whatever. ASSIGNATS. It's backed by, and you can't make this stuff up. They were backing the currency by confiscated church land. That's how they were backing the currency, by confiscated church land. Okay. But they kept printing more. So it's kind of just like copy, paste, copy, paste, copy, paste. You copy, paste too many times. What happens? The currency falls apart. Okay. Prices explode. People lose trust in the money. Riots broke out. And eventually they scrapped the paper money in France and they went back to coins. How long did this last for, this financial mess? 7 years. Okay. Also, the US, when we first became the United States, as we were fighting for our freedom, right? The US continental dollar. What happened? Revolutionary War. What does the US do? Okay, they need money to fund the war, right? So what do? They print continental dollars to fund the fight against the British. So without anything back in it, it became like a joke. It's like trying to pay for pizza with Chuck E. Cheese tokens, right? It was a joke. What was the impact? They had this phrase called "not worth a continental" that was born in the US because money was so useless. So what did the US do? After the war, they switched back to gold and they switched back to silver. Okay, that's kind of like the play for when these paper currencies start to fail. You start to see civilizations, they switch back to their old form of money. You saw it with one of the examples I gave before. Printing money wasn't working. We'll switch back to bartering and trading with livestock and grain and wheat and things like that. The U.S., when we first were a civilization, or first a country, I should say, in the U.S., we switched back from using paper money, which didn't work, which was called the Continental, and we switched back to gold and silver at that point. So countries try to revert back often to the previous method of money or exchange of barter when their paper money fails. So I don't know, like, could you imagine like the US switching back to like gold and silver? Could you imagine that? Like, if the dollar has major problems, could you imagine the US going back and we're going to switch back to gold and silver and that's going to be the currency? You can't really imagine that. You could still imagine gold being somewhat a store of value, but you can't imagine it going back to being the currency. So what's the other option? The US either, one, continues to print more money, two, reverts back to using gold and silver, okay? Or three, you could say reverts back to having enough gold to back the US dollar, but we got off that standard in 1971 with Nixon, so we were off the gold standard at that point. The US dollar was no longer backed by gold. So we can't revert back to the traditional way that the US did in 1781 when we tried to create our own currency called the Continentals, and we reverted back to gold and silver because it failed. If the US dollar gets worse and we keep printing money, what do we revert back to? And the point I'm trying to highlight here is a 13-year-old girl who's worried about her future because it's such public knowledge that we're printing money. We're in $35 trillion of debt. Okay. And so we're not producing enough. The debt is bigger than what we produce. It's bigger than the gross domestic product of the US. So like we have a problem. And so the 13-year-old girl is asking this question to Warren Buffett, and his answer again is like, one of the responses he gives, it's not his whole response, but it's like, we don't know how long the printing of money can go. But do we want to rely on that as a solution, or rely on that as, hey, here's the problem, we don't know how long the problem can continue to solve the problem? Like, it's not really an answer, and it doesn't work. So what are the choices for the US? Do we revert back to gold and silver, like so many of the civilizations before that had to revert back to their old money? Or do we move forward into a new civilization? Do we move forward into what we are today, which is a digital age? Okay, we're no longer the age that we used to be. We're not. We can't move backwards. We need to move forward. It would like somebody coming in saying, hey, I think it's a really good idea that that we go from guns to shooting with bow and arrows again. We should go fight wars with arrows. Or maybe we should go back and we should go from steel ships to wooden ships. Or maybe instead of flying around in jets, we should go and we should just go and just use tanks again as our only method of fighting. It just doesn't make sense. Like, why are we going to go backwards in technology? Like, any of the solutions to go backwards in technology doesn't make sense. And you can go, yeah, well, gold's been around for thousands and thousands of years and it can be a stable store of value. But really, can it in the digital age? It can be if you're like, you have a much you're older and you have a viewpoint of the world that hasn't changed and still fixed in the past. But like, is it really going to be the future? You have to ask yourself, is gold really going to be the future? Is it really going to be the store of value for the next 1,000 years? And what is the solution? So we know civilizations before have failed. So it tells you that through the history of money, nobody really figured out how to manage their economy and manage their treasury. And we still haven't figured it out today. And one would think that, like, okay, you go produce goods in the world, right? And you get exchange for those goods. And in exchange for those goods, you make money as a country and an economy. And you produce goods, you exchange things with the world, you keep money in your piggy bank, you have a sound of money in your piggy bank, you don't spend more than you have in your piggy bank. Like most 7-year-olds know that. Like, hey, I don't have enough money in my piggy bank, I shouldn't spend more than I have in my piggy bank. But we live in a world where that doesn't exist, and we have an economy that does not run like that. So Go watch the interview with Warren Buffett, and during it, again, I have utmost respect for this man of what he's done over the last 90 years. I just don't think his answer is the appropriate answer for the next 90 years. It's just not. It's just not. Okay. And yeah, there's some interesting responses he gives. Go watch the go watch the response. Right. He refers to Keynesian economics, which is like, we need to spend a whole bunch more money. As you spend a whole bunch more money, you can produce jobs, because let's say we go spend money to create roads, and we create schools, and we create wars, or we create equipment for wars and weapons for wars, and we're spending money, you create more jobs. Okay, that's the Keynesian economics policy. And it refers to that we did that in 1942 that helped stimulate spending in the war and blah, 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 right? I just don't think that Keynesian economics is necessarily the solution. I don't think that betting on the fact that we could just print more money, and let's see how far it goes, and nobody knows how far it's going to go is a solution. I don't think those are solutions. Those are old, antiquated ideologies, okay? So let's take a look, all right? Let's continue to go on with more civilizations, or let's just wrap it up here on what's happening. So too much printing. What we saw from all these civilizations, whether it was Zimbabwe that I just cited, whether it was the U.S., after the Revolutionary War, when they started printing continentals, which was their currency, that didn't work. Whether you look at the Weimar Republic and they started printing more currency, whether you look at French and they started printing more currency, it failed, and 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 it failed again, time and time again. So when governments print too much money, it's like making a smoothie with way too much water. It loses its flavor. That's the game. So what happens? People lose trust. They stop believing money's worth anything. And they look into alternatives like gold or silver or trading goods directly. That's what they looked into years ago. They reverted back to that. We're not going to revert back to that. We're too advanced technologically to revert back to that. Look at what's going on with AI. Okay. Look at what's going on with the digital age. Look at what's going on with digital money. We are not reverting back to these old methodologies. So when the printing of money happens, you get hyperinflation, it kicks in, and soon you need a mountain of cash for the smallest things. And that's what you saw in these countries like Germany, where they were going around with wheelbarrows of cash just to pay for a loaf of bread, man. You can't make this up. Go look it up. You can't make it up. So you have to have a mountain of cash or a wheelbarrow of cash to pay for the smallest things like bread. And if we think this isn't a real problem, go look at countries like Argentina, where the inflation is through the freaking roof. It's through the roof. 100% a year increases in prices. In some of these countries, go look at the history of the last 4 or 5 years. So there are real problems. And to think that I think the U.S. has a responsibility, when Trump gets into office, a literal responsibility to go, hey, we are going to do something to back our dollar with something that has something of value. And Bitcoin has value. Bitcoin has value. And if the U.S. is responsible enough to do that and put some of our gold and swap some out of our gold contracts into Bitcoin and make Bitcoin a strategic Bitcoin reserve, a strategic reserve for the country, to where we are backed by something that increases over time versus decreases over time. The dollar is decreasing in value over time. Bitcoin is increasing in value over time, and Bitcoin will continue to increase in value over time because it is deflationary, because there are only 21 million Bitcoin, and that's all there will ever be. Okay? And certainly I would trust more in somebody who's intelligent enough to write in a protocol or a rule that says there will only ever be 21 million Bitcoin. Why would I trust in the protocol more than I would trust in the human governments running the currency? Because look at what they've done for the last thousands of years. They've ruined the currencies, guys. Ruined them. So somebody needs to come in who's smart enough, like Satoshi, and go, holy cow, I am going to write a damn rule into the currency that says there will only ever be 21 million. That's it. Somebody had to do that. So he created a code that said 21 million Bitcoin. It is a fixed supply. You cannot change the code. And then there's actually rules to play in the game. And now people can follow the rules and not change and manipulate the rules by printing money, which has destroyed all these civilizations and their currencies that I talked about. It destroyed their money civilization. And it destroyed the people's wealth. So this is the problem that we're dealing with here. And we have to solve the damn problem. All right. So we can sit here and I'll show some trades that I'm making at the end of the day here for fun and the games that I'm playing with Microstrategy and all that. But also underneath all these games of Microstrategy and these Microstrategy derivative products that you can trade on leverage and have fun playing the games. But underneath it is an actually very serious game that we are playing. And it is the game for the first time to create a currency or create a reserve such as Bitcoin or create a store of value that can actually increase in value over time. And it is the first money ever created that will do that. Okay? It is the first money ever created that will do that. Because we know that anything that you create more supply of will lose its value over time. Gold, we mine 2 to 3% more every year. It will lose its value over 100 years. The dollar, we keep printing more. It loses its value every time we print more money. We've been printing 6.58% every year for the last 100 years of the dollar. It loses 6.58% of its value every freaking year. Over the last 4 years or 5 years, we printed 40% more money. The dollar's lost 40% of its value. Bitcoin won't, because there's 21 million coins. So thank goodness that somebody took responsibility to create a digital protocol, a rule that says there will only ever be 21 million coins. And because of that rule, the players who come in have to play the game around that rule. And it's the first game that we can actually win at as it relates to money. And if you're just joining us, you can go back and watch the rest of this, because I literally just gave the history of civilizations crashing in terms of their money crashing because of the printing of money. It's been going on since the Yuan dynasty, man, in China. It's been going on for a long, long time. This is not a new thing of the printing of money. And it never, ever, ever worked out well. It just didn't. So the answer to your question, the young 13-year-old girl who asked Warren Buffett, like, what happens if the U.S. keeps printing money? What happens if the U.S. does not become the world reserve currency anymore and people stop trusting the dollar and they get off of it? One day, could that happen? Yes. I hope it doesn't happen. Could it happen? Yes. Her question is, what do we do? What do we do? And the solution and the answer, Mr. Buffett, you're a wizard. You're a legend. You've made billions and billions of dollars. You're a smart investor. You bought Coca-Cola. You even bought Apple and got in the digital age to some degree. But at the end of the day, the answer to the question is not, nobody knows how far the US dollar can go in terms of printing money. Nobody has the answer to that. We do have the answer to that. It won't last forever. It won't. And we do have a solution to it. It's called Bitcoin. It's very simple. And mathematically, logically, you can break down the solution and you can compare the dollar to Bitcoin. You can compare gold to Bitcoin, and you will see that the features of Bitcoin compared to the dollar or compared to gold, there is no comparison of what is going to increase over the next 20, 40, 60, 80, 100 years. Any logical person who actually took the time to study what Bitcoin is, to stack them up against each other and do a comparative analysis, would understand that Bitcoin is the superior money. It is the superior store of value. Period. And what is the future going to be? Anybody who were to look at the future and to look at the current present scene of the world that we live in now knows that we live in a digital world. And to argue and say to the fact that Bitcoin could not be a digital currency or a digital store of value when you're paying for things with PayPal, you're paying for things with credit cards, you're paying for things like Venmo, all these things are stirring up all the time and coming up all the time, or springing up, I should say, and people are using them digitally. And they're using them to trade dollars back and forth. And they're using them to trade dollars, which is losing its value by 7% every year in the best case scenario. So to think that we couldn't have a protocol, a set of rules, and a code that was written that says there will only be 21 million Bitcoin, and to think that we couldn't all buy a piece of that code, like a digital certificate, and that we couldn't use that to store our value, to store our hard-working energy that we put out to the world to exchange for the dollars that we get, to pay 40 or 50% taxes, depending on where you live, to have it eroded by 7% a year in a good year and 10 to 12 or 14% a year in a bad year, to think that we don't need a better store of value is ludicrous. And to think that we can't all just go out and buy a digital certificate in a game that we know we can win, that only has 21 million Bitcoin, and that will be the game and the rules and the code forever. Why shouldn't we own a digital certificate? Why doesn't that sound like a better game to store my money? Why doesn't it sound like a better game to store my money when I can transfer it as fast as I want? Why doesn't it sound like a better game where I can store my money because I own it, I control it? I don't need a middleman. Why is it not a better game? It's got the speed, it's got the power, it's got the digital age behind it. It is part of the digital age. It's got the store of value. It's deflationary. One who just didn't take the time to study it and understand it would say, let's go back to gold. Or let's just rely on the dollar and keep printing money. Like, what is the solution? If somebody has something better, like, recommend it. Recommend it. But that is my answer and my analysis and answering the 13-year-old girl's question of, like, look at the history of money. Look at the history of currency. Look at what governments have done. In the control of the government where they can press the button and print more money, it never worked out in history. What makes you think it will work out in the future? It will not. Eventually, it will decline. So what is the solution? And so one has to be open to looking. You don't have to drink the Kool-Aid and all of a sudden say, but one has to be open to looking for alternative solutions. And so I think as we continue to look at this and we look at Microstrategy and we look at what they're doing, they're taking Bitcoin and they're bringing it into the traditional financial system. And I think it's brilliant. And whether one believes in Microstrategy or not, and you can sit there all day long and listen to the headlines that are out there of people that are just not informed. MicroStrategy is a Ponzi scheme. No, but since the beginning of time, titans of industries have been going out and borrowing money, using it as leverage to go buy things like real estate. If you watch what Saylor's doing, he's using leverage to go buy Bitcoin. That's it. And the fact that MicroStrategy is trading at a premium, because you look at Barron, the financial journalist at Barron, which is like an editorial for like the financial world, and they analyze stuff and they analyze things like Bitcoin and money and finances and investments and things like that. They published something on like December 6th that was like, oh, watch out, MicroStrategy, the $90 billion company. They're way overvalued, right? And they published negative news about it and that they're trading at a premium. And I think the thing is that, like, you should ask yourself, well, why are people willing to pay more for MicroStrategy? Why are they trading at a premium? Which basically means people are willing to pay more for the stock. There has to be something to it. People are willing to pay more for the stock. And so the benefit is that Saylor takes the more, right? If they were willing to pay X, and X was just like, here's what the value is on paper. When you look at MicroStrategy's assets that they have, which is you take their Bitcoin assets and you minus out their liabilities, and you look at their Bitcoin assets and you go, hey, you know, the world's willing to pay just X based on their assets. And so here would be the value that the world should pay. But the world's saying, no, we're willing to pay X plus 1, plus 2, plus we're willing to pay more. And the sentiment in the marketplace is we're not going to just value MicroStrategy based on their Bitcoin holdings or the net value of their Bitcoin, because you don't look and value a company like Apple based on that. You don't look at their treasury and look at Apple and go, hey, Apple's got this much in their treasury, let's value them based on this. You don't do that at all. Apple's based on the future value of what people think it's going to go to. And they base it based on the products and the services and the things that they offer up to the world. And they look and they go, Apple should trade at a multiple. In fact, I think last year, Apple traded at a 41x multiple to their earnings. I think the year before that, Apple was at a 29x multiple to their earnings. So people are willing to pay 41x to their earnings. They're willing to pay a multiple of their earnings for the share price to own a share of Apple. So if you look at MicroStrategy, it's like Okay, well, MicroStrategy is not trading in iPhones and they're not trading in computers. What are they trading in? They're trading in Bitcoin, right? And they don't have earnings like Apple does. They have earnings in their software company. But if you look at MicroStrategy's valuation, which was Barron's published the article in December 6th, it was a $90 billion valuation. At times, MicroStrategy was worth over $100 billion. Now I don't know what they're worth. If we look at their present time value, we'll have to take a look at it. But they're around 90 or $100 billion, the value of it. So they don't have earnings per se because they're not selling their Bitcoin, right? They're holding onto their Bitcoin. But you can't just say that the value of MicroStrategy, because they are a Bitcoin company, like that's what they're saying they are now. They're not a software company anymore. They're a Bitcoin treasury company. And they're providing Bitcoin type products in the marketplace. So you can't just look at the company and go, okay, they have this on their balance sheet of Bitcoin. After you subtract their Bitcoin assets minus their liabilities, they have this much Bitcoin, which is 38 or $39 billion Bitcoin. And so we're going to value them only at this. No, you would have to value them by more than that because that's how you value other companies. And it's not apples to apples because you're valuing Apple based on their earnings because they're selling products and services every single day. MicroStrategy has a long-term game where they're holding the Bitcoin for a long period of time. So investors are looking at this with a long time horizon. They're going, hey, I'll loan you, $1 billion to go buy more Bitcoin. Because they're looking at the value of Bitcoin over time and they're saying to themselves, I think Bitcoin's going to go up over a 4 to 5 year period. So I'm willing to loan you, Mr. Saylor and MicroStrategy, $1 billion at 0% interest because I know over 4 to 5 years, Bitcoin's going to go up. And the $1 billion that I gave you, I'll get my slice of pie on the back end when your stock goes through the roof over 5 years. Why are they betting on that? Because over every 4-year period, Bitcoin has gone up since the last 16 years since it's been in existence. So investors are smart and they're willing to pour tons of money into MicroStrategy because they're simply saying, we believe that Bitcoin is going to be up over a 4-year period. If Bitcoin is going to be up over a 4-year period, we also believe that MicroStrategy is going to be up over a 4-year period. So they're willing to loan money to MicroStrategy to go buy more Bitcoin. So MicroStrategy takes that leverage of the money that's been loaned to them that they're paying 0% interest in. That's why it's leverage. Imagine somebody goes, hey, here's $1 million to you. Go buy Bitcoin. 0%. What are you going to do? Right? Don't pay me back for 4 to 5 years. I'm going to take that bet, man. Give me the mill. I got to pay 0% on it. Give me the mill. You want to give me a bill? I'll take the bill. Give me the mill. I'll take it. I'll put it in Bitcoin. 4 to 5 years, I know it's going to be up. I'll take it. And in 4 to 5 years, what happens, right? If Bitcoin is up, now this is the game where if MicroStrategy is up, so they give MicroStrategy the money to go buy Bitcoin. So the people loaning MicroStrategy money will go buy Bitcoin. Says, hey, if Bitcoin is up and MicroStrategy is up after 4 to 5 years, just we'll take a slice of the pie. Meaning we'll convert the money we gave you into stock, so we can have a slice of your pie, your pizza pie of MicroStrategy. If it's not up, just give us the $1 million back. Or the $1 billion back. So Michael Saylor, who's like, dude, I know Bitcoin's going up over a 4-year period. It has for the last 16 years with governments who might start to pour into it, right? If the U.S. adopts a strategic Bitcoin reserve, with companies adopting the Bitcoin standard and putting Bitcoin on their balance sheet. Over 150 companies are doing this already. If this keeps to accelerate, what makes you think that Bitcoin is not going to be up 4 years from now? Because 4 years ago, this wasn't happening and it's up. Right? 4 years ago, we didn't have the ETFs. 4 years ago, we didn't have governments pouring into, considering like an arms race into Bitcoin. Like Cynthia Lummis says, rather than an arms race for weapons, imagine if countries decided to have an arms race as a metaphor for Bitcoin. And the game became, how much Bitcoin can we accumulate? And there was a competition to accumulate Bitcoin. So if we know governments are going to come in, it's only a matter of time. El Salvador's already come in, right? Bhutan has already come in. I think Bhutan holds like the statistic for gross national happiness. It's a country that is on the border of Asia and border of China and border of India. Okay. So Bhutan holds Bitcoin. So if you look at these governments and we look at what the U.S. is going to do, if we look at what's happened with the ETFs and the amount of money that's poured into ETFs, and we look at what companies are doing, like to say that Bitcoin's not going to be up over 4 years period, and to bet against it, I think is asinine. I just think it is. I think it's almost a virtual impossibility for over the next 4 years for it not to go up. Not financial advice, not legal advice. Could everything go to hell? Could the entire network get hacked? Could everything go to shit? Yeah, but if the Bitcoin network got hacked, that means the US government networks would get hacked, Google would get hacked, like the largest corporate network, computer networks in the world would be hacked. Okay, so we'd have bigger problems if Bitcoin actually got hacked. The network is secure. It's backed by thousands and thousands and thousands and thousands and thousands and thousands of computers. No central government controls it. No one computer controls it. The nodes, which are just basically like a form of computer, like a node is a computer. And so that each node, each computer, so to speak, has a copy of all the Bitcoin transactions ever made. So if one node gets sick or goes down or explodes, the next node, quote unquote, computer has all the copies of the transactions. It ain't going down, dude. Ain't going down. So are you going to bet in 4 years that Bitcoin's still going to be there? So yes, many people are betting on this. And so when you ask why MicroStrategy is trading at a premium, why people are willing to pay more for MicroStrategy stock than the book value of quote unquote their Bitcoin is actually worth, it's because there's supreme investor confidence in this actual stock. And there's supreme confidence in Bitcoin. And so when Michael Saylor's issues stock and people are willing to pay the premium, that's a good thing because he's taking the excess money that people are willing to pay. And with the excess money that they're willing to pay, which is the premium, he's taking that and putting it into Bitcoin. That's a good deal, man. That's really a really good leverage strategy. Really good. Like sound. So why am I bullish on MicroStrategy? Because of that. Why am I bullish on Bitcoin? Because of everything that I just said about the history of currencies. Currencies eventually fail. They do. How long will it take for, we're already being debased here in the US every single year with the currency. So how long will it take? Well, the US is a superpower. I hope that the US continues to thrive and I hope the dollar continues to stay strong. But we know that at the end of the day, comparatively to the rest of the world, the dollar is strong. But look at the currencies in the rest of the world. There's massive problems. Massive problems. Okay, in fact, so that the U.S. has to pay more to people who want to borrow their money right now or give them money. So when people want to give money to the U.S. and be like, hey, I'm going to give you my money, pay me some interest, like we're paying out more interest now to people to actually loan us money, which isn't really a good thing because the U.S. has to pay out more and more interest. That's a sign of maybe the dollar isn't that strong because people say, hey, I'm going to loan you some money and the U.S. is going to pay some interest out on that, but they got to pay more interest because people are like, hey, give me more interest for the money that I'm giving you. So with the U.S. paying out more interest, that creates a bigger problem too because we got to pay more money for interest rather than putting our money to work. So we got problems, right? And the solution, I think, is very, very simple. In conclusion of this, the solution is very, 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 very simple. Okay? The summary of today's talk is simple. Number one, currencies over history have failed. Some, like the Roman Empire, took 150 years because they were diluting the coins. Some, like the Yuan dynasty in China, that was the first creator of paper money, they failed after a period of time as well. The Weimar Republic in Germany after the war, they had to print a lot of money to pay reparations for the damage they did during the war. And so their currency eventually collapsed and they had to create a whole new one. So yeah, it's like the currency could collapse and then we could create a whole new one. But like, if the US is going to create a whole new currency, what do you think they're probably going to create if they do it? They'll create a digital currency. But why would we even trust in a digital currency? Right? Because if it was paper before and gold before that, but if paper failed or continues to fail or continues to get debased, and you look at the civilizations before where their currency just collapsed and they created a new one, or they went back to trading gold or trading livestock or trading grain, right? So if you can either go back or you can create something new, but even if the US comes out or even China comes out or another country comes out and we're going to create a central bank digital currency, like nobody's going to trust in that. Just the fact that you call it digital because digital is the the kind of talk of the day of like digital money, Bitcoin, right? It's the talk of the day. So if a government goes, we're going to create digital money, there's no value or trust in that because they can just print more digital money. So don't get lured into any government saying we're going to create our own digital money, because there's no trust that the governments in the past have ever not printed money. So a digital currency for a government creating their own isn't going to solve the problem, because it's the people in control who are creating the problem. And it's us as the voters who elect them into office that are subscribing to the problem. So we have responsibility as well. So we got to have a responsible solution. And the responsible solution is play a game by the rules. You know, one would say, I got so much in my piggy bank, I should only spend so much. If I got $10 in my piggy bank, maybe I don't want to spend 12. That might be a good idea. You know, that might be a good idea. Maybe I should just spend the money that I have in my piggy bank, and maybe I should only spend a portion of it and save some of it. That could be a good sound principle. Governments aren't doing that. They're printing money to pay for the lack of money they have in their piggy bank. So it's a problem, right? We got Russ on there. We got 88 Sats out there. We got Charlie on there. You know, we got Brendan on there. What's going on, guys? We got John. So we got problems, you know, and so we need solutions. And let's, you know, not, rather than dramatize the problems and get all dramatic about it, we just need to make people aware. So sometimes we need to get on the microphone and scream a little loud. But at the end of the day, we also need to go, hey, the solution's simple. It's not going to be, we're not going to trade in gold or silver anymore. We're not going to trade in paper for the long term. We're already off paper. You're on Venmo, you're on PayPal, you're on digital already. You're just not on a sound digital. And you're not going to elect a digital bank currency. You're not. No sane person on the face of the planet would subscribe to that, because they're just going to print more. And it's just going to be mass as, hey, we've created this new currency. It's going to bail us out. It's all digital now. Rather than trust in Bitcoin that is controlled by nobody. That's the story that they'll tell you. It's controlled by nobody. Right? It's floating out there in cyberspace. It could get hacked. These are all stories that you'll hear. And it's good that it's controlled by nobody. It's controlled by us, the people. Right? And the more we keep buying it up, not financial advice, but I'm going to keep buying it up. And the more we keep buying it up, the more companies keep buying it up, the more citizens keep buying it up, the more control we will have. Because, like, you know, we don't want governments coming in and scooping up the entire supply. You don't want the government to control 90% of Bitcoin. You want the people holding it. That's the game. And so the people can get smart. And the way you can vote is you can vote with your money. Right? Not financial advice. I will vote with my money, and I will continue to buy what I think is sound, which is Bitcoin. So I can vote with my money, and I can vote with that money, which will store value over time. And it will go up over time. And that is the only smart choice for me, is to subscribe to something, one that I believe in, one that has good rules, one where you can play the game and know what the rules are, one where you can win the game. 1-1-1-1 versus print, which is no game at all, because you can't even see what's going on. You can't keep up with the amount of printing, and you can't even fathom the amount of debt. Like, how do you even make sense of $35 trillion of debt? And how do you make sense of the solution of keep printing to pay for the debt? It just doesn't work. Just in a very simple, like, perspective, it doesn't work. It doesn't work. It's impossible. I have $10 in my piggy bank, and I'm spending 12. Let me go print some fake money to pay for the 12 that I'm spending. Oh, I just spent 14. Sorry, I only got 10 still in the piggy bank, but I just spent 14. And let me go print some money to pay for the 14 that I spent. How'd you get the 14? You only had 10 in your piggy bank. Oh, I went to my credit card company. I spent another $4 out of I had 10 in my piggy bank. I spent that. Then I went to my credit card company, you know, and I paid them 28% interest so I could spend $4 more. It's a good one. It's a good one, right? So it ain't sound. All right. So I'm going to get into it. I'm going to show you a little trade that I made the other day, not financial advice. I don't recommend trading for somebody who is first new to anything money-wise or investing, somebody who hasn't bought Bitcoin. or hasn't bought MicroStrategy, or doesn't know much about it, or doesn't know much about trading, I don't recommend trading at all or doing anything that I'm showing you right now. I'm just showing you something that I've learned over time. I got studied in. I learned it. I discovered it. I watched it. I observed. I studied the graphs. I studied the charts. And now as a game, I play these games from time to time, from day to day, because I like to have a game with money. But 96% of everything that I invest is invested over longer term periods. And when I'm trading, I do it over a day or 2 days or a week. So I'm just going to show you an example right now so you can see, because if you were on the podcast yesterday or 2 days ago, I was like, hey, I might be making this trade right now. Okay. So again, before I show the trade again, I'm going to put the disclaimer up again. This information here is for educational, informational purpose only and should not be considered financial, legal, or investment advice. This is literally just showing you from an educational standpoint something that I'm doing. Okay. So let's get in and see where the trade sign came in on this here. All right, so this is MicroStrategy, but not the pure form of MicroStrategy. So to use an analogy here, we've got Bitcoin, which is like crude oil. Then Bitcoin goes through the oil refinery, and it comes out the other end, and it turns into something like MicroStrategy, because MicroStrategy buys Bitcoin, right? Similar to like crude oil coming out the other end and it being like, high octane jet fuel or gasoline or diesel, right? So MicroStrategy, buys Bitcoin and they hold Bitcoin. They hold the crude oil, right? And in the marketplace, people go out and they buy MicroStrategy. There's also derivatives, other forms of MicroStrategy called MSTU, which is a 2x version of MicroStrategy. The whole idea is if MicroStrategy goes up 1%, MSTU is going to go up 2%. If you want to look at the ticker here, and you want to look at the stock symbol, if you want to find MSTR is MicroStrategy, and MSTU, the 2x version, is MSTU, okay? The 2x version of MicroStrategy, all right? So you can see it, and if you want to see what it's trading at $9.30 the other day. And so where did the buy? Oh, interesting. Where did the buy signals come in on this thing? Great. So I'm going to show you where the buy signals came in. So, and you can see this trade's totally and completely 100% different to MicroStrategy. It's a completely different stock. And Michael Saylor has nothing to do with this. Like, he did not create this. Like, he created and founded MicroStrategy. He did not create MSTU. Somebody is just kind of trading or creating a fund, I should say, off MicroStrategy's power and saying to people, hey, we can get you 2x return. So it's super volatile, super risky, not recommended holding it for the long term. And it's something I trade in and day out because it has lots of volatility. And when I'm trading, I like to have lots of volatility, period. So if we look at the ticker on MicroStrategy, like right now, let's just go look. We look at MicroStrategy. Let's see if I have it up here. It's trading at 329 right now. And then if you look at MSTU, totally different. They are not the same thing. It trades at $9.34 right now. Okay. At one point when MicroStrategy was at like 500, this was trading at $30. Okay. So, what was the trade? Let's go to the videotapes here. What was the trade? I will show you the trade quickly and then we will end off. So trade was simple. The signals came in here. So if you look at my chart, this is a signal here that's signaling that a buy is coming in. And then up here, when the line goes from yellow to blue, the signal comes in that you should buy. If you were trading, right? Hypothetically. And then, so this operates on multiple indicators, things that indicate or point out that you should actually go buy this thing. If you were trading, I'm not recommending you trade or buy, not financial advice. Okay. So here this happened on Wednesday when I was doing it live and I was showing you, hey, this buy signal is coming in here. I might jump in here and buy something. And, what I was waiting for was the trend line to turn here from yellow to blue. And the moment it turned blue is when I actually placed my trade. So you can see right around here, it turned blue right around $9.37, $9.38. to say go buy. It really turned blue visibly higher, so I bought in a little bit higher. But right around here is when it was telling you to go buy. Okay, and then you can see like how, right here, even this point here, MicroStrategy is much, not MicroStrategy, MSTU is lower. It's 9.08. And if you even watched this morning, we dropped as low as 8.68. So you could get in the trade. And by the way, this is another sign here to buy. But I'm already in the trade, so I'm not going to buy again. And then it turns here with the trend line that says buy again at $9.17. Okay. So there's two indicators that are saying buy. We could drop way lower and go down, and then another sign would come into buy. And that's the risk of trading. You could buy in once, and then you get another side that says buy in again, and then you get another sign lower that says buy in again. Typically in the past, when I bought in here at the first point, sometimes I'll layer in and buy in here at the second point again, but I'll typically just buy in once. And typically, like if even if it goes down here, it will revert back up here to a higher range normally, and I will get out of the trade at a higher range and make some money. Okay. That's the typical game. So do I think over the next couple of days, if you look at the price down here of where I'm circling down here to the left, follow my pointer here, it's at $9.31. Do I think it's going to go up in the next couple of days? Sometimes they can sit in these trades for a week. The last trade that I showed you, I had to sit in for a week, and eventually it went up 25 or 28% from where I bought it. So, and then I exited the trade at a less of a profit than 28% because I missed the signal, right? And that's one of the things, you got to watch the trading signals all the time. And I missed the signal, so I got out for a profit, but less of a profit. So here, again, first indicator comes in, but I wait for the trend line to turn, and then I get into the trade. All right. Hopefully, Monday, we'll get some news, and like the stocks will shoot up, and MicroStrategy will shoot up, and this will shoot up, and I'll get out at a profit. Maybe it'll trade sideways for the next week, and we'll have to wait for Trump to get in, and I'll get out of the trade at a positive. What I do know about this, in my knowing of why I confidently make the trade, is just that like this stock was at $30 at one point a couple months ago. And so I know at some point I'm going to get out for a profit. And holding these things long-term isn't the best because there's high fees inside of this, and also there's high volatility. So let's say the risk of I got in at $9.30. If MicroStrategy all of a sudden dropped 50% tomorrow, this drops at 2x MicroStrategy. So this would drop 100%, and then I would lose all my money. And that would not be a good thing. So I would get liquidated and I'd lose my money. So there's super high risk in something like this. But from my viewpoint, I don't see a very high amount of risk because I've been watching these charts for the last 5 months. I've studied them. I've observed them. The win ratio is pretty high if you just follow the charts. I would say it's about above 80%, and that's being conservative. And so I follow the charts and I trade based on the charts. The other day I watched it drop to $8.70 and before I made the trade. And I was like, I'm just not going to buy in that low. I'm going to wait for the charts to tell me to buy. And then I bought it at a higher price, even as I was watching it go down more. And I knew it was going to go back up at some point, but I'm like, I trade by the charts. I'm not going to get emotional about it. I'm not going to get irrational about it. I'm going to trade logically. I'm going to do what the charts say. I trust in the charts. They win most of the time, and that's how I do it. So I'll post or come live again when I get out of the trade and get out for a profit. And that's my belief of what will happen. I'm like 99.999999% sure that at some point I'll get out of this at a profit, simply because what's happened in the last several months with MicroStrategy and Bitcoin. And I still firmly believe we're in the bull run. And so over the next 5 to 6 months, I think we're going to see the bull run continue, even though we have bearish moments of dips and the US selling their Bitcoin, apparently from the headlines of 6.5 billion Bitcoin before Trump gets in. I don't know if that's verified yet. What I do know is, per an article that I read, that the US, the money went out of the US's wallet, and the $6.5 billion is no longer in that wallet. So it looks like they may have sold it. If anybody has news on that to verify that they actually sold it, let me know. But whatever's happening right now, I believe that when Trump gets in, I think the stock market's going to go up. I think that Bitcoin and Microstrategy are going to go up. And so I'm either going to get out of this trade in a couple days or a week or two at a profit. So there you have it. That's how I look at it. There are many times, if you go look back at this chart, that like you get in and out of trades in a day or two, and you can win pretty good. And there are moments where you get in a trade, and sometimes you get out of a trade because you trade emotionally, like I have, and you lose money. You're like, oh God, I get emotional because it was going down. Now I watched this thing go all the way down today, and I was like, I'm not selling out of it. I'm just gonna trust in what I know, trust in the charts, and go for a win. So there you have it. All right, so that's my little. It's just kind of a fun thing, right? Like we can talk theoretically. We can talk about the properties of Bitcoin. We can talk about MicroStrategy. We can talk about the history of money. We can talk about what's going on in the news, and it's fun. But I can also talk about things that I'm doing on a daily basis that show actual action and doing things. And I think it's kind of fun to see the tactics and the strategic point of view, which is why I do this. I don't do this to say you should trade. You also shouldn't follow my trades, right? Like my trades aren't 100%, and you could lose money. So I'm not here to say follow my trades. I'm just showing you what I'm doing. And if you really want to get educated on it, this is TradingView. That's the software I'm on, or the platform I'm on. And then I use the scripts from Invest Answers, and I plug their scripts in, and then I follow the charts here. And I entered my own metrics and things like that, and I picked my own stock because I wanted to pick something that I know something about. So I picked MicroStrategy as my main stock to trade with. And then I picked the MSTU version, which is the 2X version of MicroStrategy. And so I picked it because of its volatility. And I'm like, if I'm going to play this game, I want to have a serious game. Like I want to watch 20, 30% gains. If you go back to some of the charts, some of the buys were 70, 80% gains. If you followed and bought at that time when it recommended, and you watch some of them just go down 60 or 70%. But the other thing is you can short it too, and you can bet against it. And so there's signals that come in on this chart where you can bet against it. I tend not to. I have bet against it, and I have won when I bet against it, but I tend not to bet against it because the reason I don't bet against it is because I believe over the next 5-6 months, this is going up. So even if I get stuck in a bad trade here where I watch it go down and I'm sitting in a trade for a week, 2 weeks, 3 weeks, I know that over time this is going up. So eventually I'll get out of the trade at a profit. But if I short this sucker, like what you see here, what the hell happened to my chart? Where'd you go, Mr. Chart? Oh my God, it disappeared. Well, if you let's just disappeared. But if I short this chart, there's some point where maybe I went down too high. So there's some point where I'll just tell you theoretically, I'll get off the screen. So there's some point where the signal comes in where it's red, and then red means okay, sell because you're about to see a decline. And so at that point I could short it and I could make money on the way down. So the whole idea here is you can follow the charts, you can buy, make money when it goes up. When the red signal comes in of the red signal, which is one indicator to sell, you need to wait on 2 more indicators. Then you can short it and you can make money on the way down. The risk of shorting it, which I don't really like to do, and I'll do it with a smaller amount of money, is like if I'm wrong, or the charts are wrong, I should say, and I short it and we go on a bull run, then that thing just keeps going down and down and down and down. I could lose all my money. Okay. So on the long positions, I'm bullish long term on this thing. If I buy in and the charts are wrong that time, I can just hold on, and at some point over the next 4 or 5 months, it's going to go up, and I'll get out of the trade at a profit. That's the mentality. Okay. All right. So that is the idea. I hope that helps you. Not financial advice on this. If you want to go get educated on it, the person who's like freaking brilliant at trading is James from Invest Answers. I get no referral fee for doing this. It's just goodwill. He's super, super brilliant at doing it. And I just like to follow people who are smart. And then I picked up my own game, and I'm like, I want to trade MicroStrategy. And I started doing it, and it's fun. And I found something I know something about, and I found something I believe in, and I watched the trends. And before I ever started trading with real money, you can trade with paper money. So you can go on to TradingView, and you can go to Alpaca, the exchange, and just pick paper money. And you literally trade with paper money, and it gives you a fun game. Because come on, at the end of the day, if you don't have a game on a daily basis, it's boring. I got so many damn games going on with my other businesses and things we're doing, but I like having a game. I like waking up in the morning, even on the trades. Like I don't look at my long-term investment portfolio as much as I look at the trades, because on the trades, I got to get in and out on a day or two, Or I got to watch. Am I going to get out today? Am I going to get in today? I got to watch. And sometimes like, okay, this morning I'm like, there's nothing to buy. There's nothing to sell for me right now on these charts. Let's just wait. And I'm in the waiting game, but it's the anticipation of waking up and going, it's today. I'm going to sell out of the trade. It's fun. So as a fun game, even if you don't do it with money, real money, you can do it with paper money. Okay. All right. So anyway, new skill sets, new games, new beginnings, new economies. Bitcoin is here. Bitcoin is the future. We are in a digital age. We are in a digital economy. We have been for a while. And, years ago, I don't know when you were born, but, you used to take these big computers out of boxes and put them down. And, years ago, the internet was just getting developed. And it was like, what the hell is this internet thing? And nobody believed that the internet was going to be real. Like, what is this thing? It doesn't even make sense. So I'm just going to send things through the mail and continue to send envelopes and letters to people. And email got invented. It's like, wow, in seconds, I can send email to somebody. And I can send a message to somebody. And then iPhones got invented. And people were like, oh, my God, on an iPhone, you can do this thing. And then all of a sudden you could stream online. You're like, I can stream now. Look at this. Like I can stream and watch a movie on my computer, on my iPhone. Like nobody would have believed these technologies would have existed. If you went back 25 years and you said you'd be watching on Netflix and streaming a show on your phone, on the plane, somebody would go, you're absolutely a crazy lunatic. If you said 25, 30 years ago that we would have robots that are coming out that eventually can sit here with you and be your assistant and be in your home, like, Elon's creating with Optimus, and you would eventually have robots, people would go like, come on, like households could have robots in them. If you had said 25, 30 years ago that you wouldn't be driving your car, but like a robot and a machine AI would be driving your car, 25, 30 years ago, people would have laughed at you. They would have laughed because people can't fathom it and wrap their heads around it because it's so new and there's just slow adoption. But the early adopters win the game. All right. And so here we are. In 25 years, what are you going to be saying? Are you going to be storing your money in gold still? Not me. Okay. And are you going to be storing your money and betting on the dollar and like, hey, I'm afraid I'm just going to keep my money in cash? Like, is that going to be the play? I don't think so. All right. So that's the game. You'll be walking around with Bitcoin, or maybe in your cold storage wallet, but you'll be traveling around knowing that you got your own bank. That's the new future, my friends. See you on the flip side. Hope this helped you.